Good afternoon, everybody, and welcome to the earnings call for the first quarter 2022 of WDC Networks. I'm Andre Valenti. I'm the CFO and IRO. We have with us our CEO and founder, Vanderlei Rigatieri. So now let's begin. First of all, I would like to read our legal disclaimer. These statements contained in this document regarding WDC Network's business and growth prospects are based solely on management's expectations for the future of business. These expectations substantially depend on domestic market conditions, on the general economic performance of Brazil and international markets, and are therefore subject to change without prior notice. All variations presented herein are calculated based on the numbers without rounding. This performance report includes accounting and non-accounting data such as operating data and pro forma financial data. The non-accounting data were not reviewed by the company's independent auditors. Now, I'd like to hand over to Vanderlei. Good afternoon, everyone. Once again, it's a great pleasure to be here with you to tell you about our quarterly earnings. And as always, I like to mention the highlights as they are very important so that you understand what we've been going through in this first quarter. One of the important things is that we, as always, have focused on preserving our operating margins. So, regardless of market conditions or anything else, an important thing for the company is to truly preserve our margins, our operating margins. One of the main highlights is the growth of our net revenues in the quarter. So WDC achieved 241 million and 200 in growth, 6.9% year over year. We also achieved an adjusted EBITDA of 65.3 million BRL, an increment of 10.2% year over year, meaning we are growing our margin, we are substantially growing our bottom line. And the EBITDA margin was 27.1%, achieving zero point 0.8 percentage points higher year over year. The other highlights I believe are important and we have to mention in this period, the first quarter of 22, is that WDC had a follow-on for CVM 400, which was done in February 2022. So I'd like to remind you that that was a possibility to enable the negotiation with non-qualified investors. In July last year, we had the IPO with CVM 476 that only enabled qualified investors. As of this quarter, we have opened for any investors, and that was one of the material facts this year, enabling any investor to trade our shares and increase our liquidity from then on. Another very important thing that I would like to clarify to all of you is that the WC strategy remains firm in the purpose of leveraging TaaS sales, so technology as a service. And in this quarter, we closed one of the biggest TaaS contracts in our history. It was closed in 1Q22. The total amount of the contract was over 99 million BRL. It was with Grande ISP, and that gives you more flavor of what's going on. So major ISPs that are capitalized, that are adhering to our business model. And this contract with this large ISP is a supply agreement for 12 months. So we're going to execute the contract during this year, and that will lead to total sales as we deliver the product. And it's a 5-year contract term. So it's very important for you to have this information in mind. It's not a result that's coming in right now, it's in the long term. And without a doubt, that was a fact that was very important, and we couldn't mention that before because of the silent period. And that, to me, shows that our strategy is on the right path, and we are having more adherence from important customers in the TAS segment. Another important aspect, which is one of our differentials, is that most our distribution competitors don't have a plan, and we decided to have one. So we achieved a record of 62% of all our sales were from products that were produced in Brazil. Another good thing that TAS offers us is an important highlight and gives you an idea of the WDC financial health is the accrued backlog in revenues that we went from 606.8 million in this quarter, and we increased it, meaning that we grew it by 32% year over year. So the revenues backlog is the revenue to be realized in the balance sheet. It hasn't been recognized yet, but as you know, we have a track record of a churn that's under 1%. So that's guaranteed future revenues. Another thing that makes us very happy is that we were ranked by the two most famous rating agencies in the world, Standard& and Poor's and Moody's. So we hired these companies to rank us, and we achieved a AA negative rating. So that's the first time we do that in our history, and we obtained a ranking that is much higher than what we see on average in the market. So for us, that's yet another sign that we are significantly healthy and well positioned to even have the second issuance of debentures that was announced yesterday, approved by the board. So we're launching the second issuance of debentures in the amount of 600 million BRL, with terms that vary from 5 to 7 years, with a 3-year grace period, and that will give us a lot of breadth. And the firm guarantee of the coordinating banks. So they're important funds so that we can have more CapEx capability to be able to fund TAS development. So that's an important snapshot of our main results. Now I'm going to hand over to our CFO and IRO, and Andre Valente, to give you some more information. But I'd like to highlight that, first of all, total sales. You can see on the screen that in the past 4 years, we had a CAGR greater than 42% year over year. Last year, we ended the year at total sales of 1,466 million. And as we usually disclose, We had a drop in 8.8% of our total sales, ending at 293.9 million in 1Q22. That reduction is mainly a result in the lower sales in the telecom segment. We can go into further detail about that later on. We had a retraction in the small provider segment. You can see that from Anatel, the number of new subscribers did not grow. The growth in sales in solar, on the other hand, offset that. So we had an increase of 70.7% in solar sales year over year. And another important thing that we should clarify is that WDC sells its products according to the exchange rate of the US dollar on that day, the P-tax rate. When the USD rate goes up, our sales go up. When the exchange rate drops, our sales drop. So our sales are always indexed by the US dollar. So we like to say it's not a problem in terms of margin or results, but when the USD leaves the levels that it was at the end of last year and goes into the rates we had this year in the first quarter, we had an impact to the top line of almost 5%. It was 4.6% actually. So part of that reduction in total sales was also a result of the exchange rate of the US dollar. I'd also like to mention, and we can see that on the next slide, are our net sales. So here you can see our net revenues. That also has a history of growth in the past 4 years with a CAGR of 42% and grew 6.9% year over year. It's important to say that WDC has a non-accounting figure, which is total sales, that includes what we sell and the total of the new TAS contracts that were closed. But net revenues is actually what we realize month after month. So you can see that even though we didn't grow our total sales, we can demonstrate our strength and our resilience in our business model by showing the positive results of our net revenues. So we did not grow our top line of total contracts closed, but still, our net revenues had an increase of 6.9% year over year. So it's important to mention that our net revenues in solar, that as of now we're going to highlight, so up to last year it was included in corporate, but from now on we will highlight the segments separately: the telecom segment, the enterprise segment, and the solar segment. So you can see that the net revenues of the solar segment achieved 34.8% of the total net revenues of the company in that quarter. So this time during the meeting, I'm going to present the telecom, enterprise, and solar results. So I invited the directors of each area so you can get to know them and they can help us to tell the story of what the quarter was like. So in telecom, on our next slide, the results were of total sales dropping 32%, going to 135.6 million. Net revenue, again, so Total sales dropped 32%, but net revenue from what we're carrying over from other contracts dropped 18.9% to 101.6 million. And gross profit was 31.1 million with a margin a bit lower by 5.3 percentage points with gross profit of 30.6%. I'm going to invite Julio Junior Carrara. He's our telecom director, and he will talk about the qualitative aspects that we had during the first quarter. Junior? Junior, you're mute. Can you hear me now? Yes, we can. Yes, we can hear you. Good afternoon, everyone. As shown, I'd like to show everyone or talk to everyone about the situation of the telecom market in general. So we've been following the results that were disclosed by Anatel, the Brazilian regulator, telecom regulator, and our results were affected by the slowdown in new subscribers of fiber optics, which is our main product. So that highly affected our future sales, as Vanderlei has already mentioned. And in addition, we had another aspect, which was the fact that since October, the boards that we call GPON that are installed in ULTs, they are where we connect new subscribers. Our main supplier had a supply problem of that product because of the semiconductors, which is a global problem and is affecting most of the manufacturers. So that affected our slowdown in sales and new contracts. That specific product, which is very important for us because without it, we cannot sell new modems, should we should have supply back to normal in the beginning of June. So that should give us a second quarter at normal sales that we had similar to pre-pandemic period. So that's one of the issues we had in the first quarter. However, we also realized that in the first quarter, we had a considerable increase in the sale of our solutions. So, as we always mention, our providers are increasingly becoming solutions providers. So, data centers and turnkey solutions, connected homes, they're being positively impacted. They were actually in the first quarter positively impacted, and we are monitoring our business pipelines with a significant evolution of these new technologies in our providers. So some important figures that I'd like to mention is that during the first quarter, we had 5 contracts that were closed of new edge data centers that are currently being installed, and they are TAS contracts, and the results will be captured during the upcoming years. Usually they're 16-month contracts. So we have 5 new edge data centers that are currently being installed. And in turnkey, which is a service where we build the network for providers, we've had 12 contracts closed up to the time being, and 35,000 home TAS that are currently being installed. So those figures show, excuse me, Junior, it's important for you to explain that that was a launch in the first quarter of that. modality of building the networks. That's something we did not do last year. So now, in addition to renting out the modems and the GPON boards, we are also building networks for providers and creating built to suit contracts for the network overall. So it's a new modality, and we've already contract 35,000 home pass during the period, home pass. Yes, exactly. It's a new service we've launched at the end of last year, beginning of this year, and the results are very expressive so far. One more comment, just so everybody can understand. Not only data centers and also turnkey projects, as the project that I mentioned in the beginning, there's a deadline for construction, and only after that will it be converted into total sales and start considering the term to be recognized as revenues. So in the first quarter, we had many projects such as that one that are still being built, but still have not been accounted for as a result and will as they are delivered to the customers. Sorry for interrupting you, but it's very important that everybody understands that even though we have closed these projects, these deals, they still haven't been converted into results in the first quarter. They will be shown in the results during the year. Our turnaround time for a data center is approximately 3 months. So if we close a deal in February, we'll start to capture the results in May or June. So in fact, we have to consider the timing of deploying these technologies. Another positive aspect that we can see here is our highly attractive task for major customers and operators. So our pipeline has grown substantially in these opportunities inside big players. It could be major operators where we work on projects of significant amounts. So we're really excited about that because our supply is being pursued by the players and recommended by the players and manufacturers of these providers and operators. And they believe that given the economic scenario with high interest rate and credit difficulties, that our TAS offer is very appealing for large projects, be it GPON or DWDM data centers or even 5G infrastructure, which is a huge demand that we've been seeing. In addition, during the first quarter, we took measures to improve our sales efficiency, which was the regionalization of our sales teams. We had internal salespeople, people that were servicing our customers by phone, and few were visiting customers. That was working up to mid 2021, and then we transitioned into a new model. So it's 100% regionalized. We have a field sales team now that visits customers and has that face-to-face interaction with our customers, developing new businesses and bringing in new opportunities. So we concluded that during the first quarter, and now we have more effectiveness in sales, as well as more control on expenses. Because when it wasn't regionalized, it was very hard for us to have um, better trips for these visits, but now we've been very successful with that. Those are my comments, and I trust that we are on the right path our business proposal is very good for providers and operators. Excellent. Thank you, Carrara. Now, I'd like to talk about enterprise. So you can see that on the next slide that shows the results that we had. And I've also invited our director, enterprise director, Fernando Guerra, to join us here today. Fernando, welcome. So the total sales of the enterprise business unit in the first quarter had a small drop of 2.9%, mainly a result of the dollar exchange rate because these products are 100% linked to the dollar. Our net revenues increased 8.9%, achieving 55.6 million in the quarter, and we had an improvement of the margin and gross profit going from 26.1% to 28.6%, increasing 2.6 percentage points, achieving a gross profit of 15.9 million in that period. So Fernando, welcome. Now you can give us your qualitative view of the first quarter and show us what you've seen in terms of results for this first quarter. Thank you, Vanderlei. Good afternoon, everyone. As you mentioned, our first quarter started off slow, especially considering total sales and mainly considering a bit of the last part of the pandemic and also some delays in logistics and delivering chipsets, and that's global, coming from suppliers. WDC, in most parts, still works with imported products that are linked to the US dollar, and we're still suffering from that delay in deliveries. And as Vanderlei mentioned, we had very positive results even with those issues in net revenue, and that is a result of our backlog of revenues. So once again in TAS, and that shows the resilience of what we had in the market in deliveries and contracts that we signed even before the first quarter. And especially because of the large growth of the cybersecurity market and unified communication, where they deliver better margins, we had a significant growth in our delivery of gross profit and margin. We grew 20% if we disregard the US dollar rate. So we were able to deliver 28.6% of margin for the period. A sales aspect that happened in the first quarter was also the integration of some of the business divisions that were segmented in the corporate market. So we separated solar, integrated audio and video and unified communications and cybersecurity. So to increase the mix and homogeneity in servicing our customers. So the beginning of that work at the end of the first quarter started to show better results. At the end of the quarter, we started to recover our sales in professional audio and video. That segment is very important because it's mainly TAS and big contracts. Over 50% of the operating revenue of that segment comes from TAS. And we started to have the product supply coming back to normal. So the trend is still of a second quarter with some delays in supply, but an improvement in the audio and video segment. And supply coming back to normal, at least part of it. There's a high trend of growing in all market segments until the end of the year. All segments are getting stronger for many different factors. Cybersecurity, because of the growth and people looking for that technology. WDC currently works with the worldwide leaders in that area. In electronic security, it's mainly connected to big contracts and infrastructure projects that started to improve as of last year. Even with an election year that we have this year, we still have a pipeline and a backlog to be delivered during this year. So we have a positive trend on that. And audio video, professional audio video segment that works with very positive margins. And as this segment recovers, as of the next quarter, and until the end of the year, we should continue to see very positive operating results, not only in total sales, but also including profit and margin. That's an overview of Vanderlei. I understand. Yes, it's very clear that we had a beginning of the year in enterprise that suffered a little because Omicron variant held back a little. The segment that suffers the most at WDC with the pandemic was the enterprise segment, professional audio and video. But as you mentioned, in March, we already see positive signs of improvement in gross profit in that area. Thank you, Fernando. Now let's talk about the solar division. In solar, from now on, we'll see the separate figures for solar. It currently accounts for 34.8% of our total sales. I'd like to invite Andre Souza. He's our solar director. Andre? Thank you, Vanderlei. Good afternoon, everyone. In this quarter, we've consolidated our operation, and we've been able to collect good results year over year. Vanderlei? I'd like to comment first. So we had an increase in our total sales from the 1Q21 to 1Q22 of 70.7%, achieving 94.7 million in total sales. Our net revenue went to 84 million with the growth in the same order of 70%, and gross margin increased 0.5 percentage points in margin, going to 13 million of a margin of 15.5%. This segment has the highest growth in WDC, as you've seen last year and in this quarter. So now I'm going to hand over to Andre to talk about the qualitative aspects about how this segment has behaved in the first quarter and the main highlights to give you more flavor about our segment. Thank you, Vanderlei. In the first quarter, even though we've had substantial growth in the revenues and profit, we had some negative factors in the market, mainly as a result of the increase of the Selic, the Brazilian basic interest rate, and decrease in credit, because these solar projects are mainly funded by banks. And also people were on vacation, and many sales were postponed because of the Omicron variant. And qualitatively, we saw a higher drop in industrial sales and lower drop in household and large mills or plants. Given this market design and macroeconomic scenario, We already have a plan in execution since last year. So to not only grow revenues, but also have better profitability for the company and adopt a growth strategy through niche and differentiation. We continue to focus our partnership with Huawei, meaning we can have hybrid systems, automation systems, and battery systems, not only energy for solar systems, but also the telecom markets. Another action that we manage and has also shown its effects and has been highly receptive by the market is expanding our private label, not only for generators and developed by the engineering system by WDC. The products were launched and we've had excellent acceptance in the market. And with that, we are pursuing higher margin. And this for lower power, that would be for households and small merchants. And on the other side, our strategy is not just selling large projects in plants, but having a higher margin by offering service through tasks, which is our main type of service. We've already had some results for the first quarter. First contracts have been signed, and we had a great action in offering tasks in solar, especially in telecom and agribusiness. Excellent, Andre. The points that you highlighted are essential so that because the market always asks us, when will solar start to offer tasks? We've had this plan since the IPO, and now things are really taking off. Tasks started to be seen in the market, not only in the others like telecom and enterprise, but solar is being seen as a huge tool to make large projects feasible, excuse me, tasks, actually. And now an interesting pipeline moving forward in this segment. Thank you, Andre. Well, I believe we gave you an idea of the consolidated figures for the company in the three different business units. Now I'm going to hand over to Andre Valente to go into the details about the figures and the results so that you can get the flavor of what happened in the first quarter. Andre, floor is yours. Okay, on the next slide, we have some of the indicators that we have related to task performance, so the company's rentals. You can see that we have a significant drop in the number of new contracts that were executed in the quarter, where we ended at 249 new contracts in 1Q22 compared to 427 year over year. And that significant drop is a result of what happened in the telecom industry, where the maturity of tasks is still in the long term. And you can see the growth of the average ticket, where we were able to increase from 291,000 to 243,000 BRL, 343,000, excuse me, per contract. In the sale of new contracts, we have 85.4 million delivered, a drop of 31% year over year. And that's also a result of the telecom impact as mentioned before. CapEx in demobilization related to tasks dropped 33%. And here we had the same step in improvements in growing the task markup. Markup tasks is the total amount of the contract divided by the capex that we have from point zero. So we delivered an indicator of 2.12 times compared to 2.06 year over year. So a 3% growth in profitability And we have the last bullet here where we mentioned that once again, we took a step to increase the average term of the new contracts that ended the first quarter at the 249, an average term of 51 months when compared year over year, which was 45 months. So once again, we're maintaining our policy to extend contract term, as we've already been mentioning in the past releases. On the next slide, we have the evolution of the revenues backlog. Backlog is a very important indicator for the company because it shows the growth of future revenues that has already been contracted in contracts in force. So we ended the first quarter at 606 million BRL, a growth of 32% compared to the backlog 1 year ago. On the bottom, you can also see the schedule to realize the future revenues. When we talk of the backlog, it recognizes future revenues and also translates into more cash for the company and not only revenue in a very healthy way, considering the default and churn in these contracts is very low, as was shown in our disclosures and other presentations. On the next slide, we have adjusted EBITDA for the first quarter of 22. We achieved 65.3 million adjusted BRL, as you can see in the column on the right. And we like to use a bridge chart showing the adjusted EBITDA for the first quarter of 2021, which was 59.3 million. And we have the qualitative information showing that we had a loss in EBITDA as a result of lower sales volume. And on the bottom, we have the breakdown per segment. As you can see, 6.1 has a breakdown in telecom minus 12.9, and in solar enterprise, we had growth and increasing the EBITDA resulting from volume. The margin in the segments increased on a uniform basis. As you can see, we have better percentage margins, not only in telecom with 7.6, solar 500,000, and enterprise 1.5 million, totaling 9.7 million gross margin that was sufficient to offset the volumes. We also had savings in 2.4 in operating expenses year over year, showing what we've been doing in managing our operations and efficiency gains in the expenses of the company. On the next slide, we have the other lines under EBITDA. So EBITDA plus 6 million BRL, and then an important line, which is depreciation. So the depreciation costs grew by 9 million BRL. That means 29.6%, and that's very much in line with the growth of revenue backlog. So depreciation is a reflex of the company's property, plant, and equipment growth. Was this related to the new contracts for rentals of the company? So there were 9 million of the P&L. Next, we have financial results. So you see negative performance in the quarter, achieving 30.9 million in net financial expenses compared to 14.6 million year over year, a variation of minus 16.3 million BRL. So that variation is mainly a result of the loss from the exchange rate variation. From moving on to 2022, the company decided to strengthen its inventory very much in line with the supply crisis that we've been suffering in our segment. And the objective was not to lose sales and business that we planned for this year. So that's why we increased our inventory position. Part of that, those assets are in foreign currency, and considering the appreciation of the local currency, so it went from 558 to 474 approximately. We had a percentage of 15%, so our asset was devalued because of that. As we've always explained, the exchange rate variation is something that affects our results usually as a one-off. When we had our IPO a year ago, in 1Q21, we also had an exchange rate loss, and that was explained when we do a long-term analysis and you see the company's data in longer periods, you see that that is small based on the size of the business in terms of the FX variation. Another important aspect of the exchange rate variation is the sale to the major provider that was mentioned in the highlights, where we paid the supplier, the manufacturer in Asia, in advance. So that advance was recognized in our assets and that was exposed to the exchange rate. So in accounting practices, we recognize a devaluation of that asset, but that will be offset in the future as we issue new contracts during the year, as Junior mentioned. And we consider the exchange rate variation in the contract amounts. Another aspect that affected our financial expenses was the Selic rate. So when we compare the quarters in the first quarter of 21, we didn't have that increase as we had in 1Q22, and we reflected that correctly in accounting because our assets and liabilities are at present value. So when the interest rate increases, we use a higher rate to bring that to present value in order to calculate. When we do that to calculate the present value, it's higher when we have a higher rate, and that accounted for 4 million BRL in losses in the total amount of 16 million. And lastly, the net profit or net loss of 2.1 million compared to 11.2 million year over year. And when we compare the two periods, it's minus 13.3 million. Now we can go on to the next slide. Here we have the evolution of our indebtedness. So net debt is 523.6 million and 106.5 million and net debt of 417 million. We'll have another slide to explain cash operations. But here I'd like to present this healthy indicator that we have in the company of net debt over adjusted EBITDA. And you can see on the right, the chart on the right where we have a performance of 1.47 times. On the bottom, we have some very interesting indicators. We always like to compare our net indebtedness that's at 417 million to our revenues backlog. So our net backlog is, we like to say that it's something that will be recognized in the future, and debt is advanced so we can have a KPI of backlog coverage of revenue over net debt. So the coverage is of 1.47 times of our debt when we look at the backlog. Next slide. So this is a bridge chart of our cash. So we started at 337 and ended at 106.5 million 1Q22. So the main item here is operating activities that consumed 126 million. And according to our cash flow demonstrations that were audited, we have approximately 150 million of cash burn and strengthen the inventory levels and advances to suppliers, as I mentioned, for the large service provider and also some in the solar segment. There was continuity in growth via tasks, even though it was under our expectations for the quarter. We had 40.2 million in capex related to 249 new contracts that began. We had a representative amount of amortization of loans and no changes there, 67.7 million. And we had the funds coming from the CVN 400 follow-on that brought in 3.8 million into company cash flow. Those are the main indicators. So Vanderlei, you can give your last comments now before we go into Q&A. Thank you, Andre. Well, that's believe we gave you a good snapshot of the first quarter. I always like to show a bit of our vision of the future of what's coming. One of the things that I'd like to mention is that TAS is becoming increasingly more competitive. It's amazing because many ask us about the attractiveness of TAS, but as you've seen, we closed our biggest TAS contract in the first quarter, and it will bring on future results. It's in installments. It has a recurring monthly revenue for 5 years. So it was a huge indicator that we have high competitiveness with our business model. And in this macroeconomic scenario and tighter credit lines and high interest rates, we were able to remain competitive for large size customers. The new business that we started in the past quarter, which is built to suit, and so building the networks for the providers in the turnkey model will continue to be a driver that's very important moving forward in building networks. We went up to another level. As we've always mentioned, we were doing tasks for equipment, and now we're building networks to place the fiber on the poles and servicing customers and providing connectors at the end. So that business model is an evolution and new contracts throughout the year and the revenue will be diluted. So an evolution was created at WDC, an evolution of what we were already doing in terms of building networks and infrastructure for providers. In solar, the launch of the titanium line, which is a very competitive line, we are not taking part in the market of residential kits, but that line will give WDC a share in the market that we did not have, and that's very important for current distributors. So the supply getting back to normal in telecom since October last year that we've been suffering from that of these products and for the equipment for new subscribers that's starting to get back to normal and giving us new sales opportunities, not just of that, but the connection of new modems and new subscribers, and that should increase our volume during the year of telecom products. So I'm absolutely sure that the telecom market will continue to be strong and we'll still have more to come with our customers. We know that the market is a lot is happening with neutral networks, n- operators selling networks, and consolidation of providers. All of that changes a lot in this segment, but I'm absolutely sure that Brazil can still grow telecom, not only in number of new subscribers, but also other products. As Carrara mentioned, data center projects, mini data center projects, high capacity network connection projects. So all of that shows that Brazil has a lot of room to grow, and we will capture that in the upcoming quarters. So it's a need to manage the company because managing a company that grows without having cost management is very important, and we do that constantly. We hired a consulting firm that's helping us to organize the teams and improve our commissioning management. One thing that we did in the first quarter was to compensate the sales team, no longer per sale, but instead per margin, and that will bring on better results for the company. We're always aware or on the lookout for M&A opportunities. Since the IPO, we haven't made any movements in that direction, but I'm also always driving the team and the business units to pursue opportunities that can add on to our offer to help to offer a better solution, not only for the telecom market, but also for solar. In our opinion, we will have a good year given the strategies that we've implemented, and that will bring on very positive results during the year. Now let's open for Q&A. We already have some questions. I'll read some of them. Let's see the more important ones. We have a question. Lucas Raphael asked a question about growth in 2022. And 1Q22 had a drop in solar revenues when we compare that to 4Q21. Did WDC lose market share? Will solar continue to drop in the upcoming quarters? Maybe Andre could give us his opinion on that. Andre? Yes, we have to be careful with the numbers because when we talk about the figures in solar in 22, the main indicator that we have are connected systems to the grid, which is from an official report. As a general rule, they're late 120 days in relation to sales. So if you buy today, if WDC sells it today, it takes from 30 to 60 days to be installed. And bidirectional, and then in the next time that will be recognized by an L. So we talked to the competition, obviously we talked to many people, so that's one of the facts that happens when you consult other market players. You can check that information. We have another question. How far can that drop go, as this is the second consecutive quarter that you have a drop? I'm going to ask my telecom advisor here, Junior, to answer that. He's a specialist. Hi, everyone. You can hear me, right? Well, as was mentioned in detail, we had a slowdown because of the market and because of the lack of components to produce an important product for the GPON networks. With the supplies coming back to normal, we'll see an increase in our sales of telecom products in the upcoming quarters. And that will not be compared to the results of the levels that we had in the beginning of the pandemic when we had more subscribers of optic fibers. So revenues will go back. And we expect that the providers market will react in these solutions, and we see these great opportunities. Perfect. Thank you, Junior. We have a question from Thales asking about the second issuance of debentures of 600 million. Isn't that... I'm sorry, their connection is very choppy. I couldn't hear the question. Thank you for your question, Thales. According to the meeting minutes of the general shareholders meeting that was posted on our website last night, the funds from the debentures will be applied to CapEx and buying new property, plant, and equipment for the growth of TAS. About the indicators, we're carefully committed to the covenants for the first issuance of our debenturists and debt. And in those covenants, we have a KPI of 1.47 times. And we're very confident about the decision that we made to guarantee not only debenturists, but also investors and shareholders that we don't see any possibility in violating the covenants with the company's internal projections. And consumption is phased. Our capex consumption through TAS doesn't happen all at once. It's a process. And I agree with you that the gross debt will grow a lot overnight, but not the net debt. On the second, we'll have 600 million in cash. We have a question here from Raphael. Raphael is asking if in previous conferences, Vanderlei, you mentioned that you were buying more company shares as you believed that the B3 share price was attractive. I'd like to know if you're continuing to do that, and the shares dropped over 50% in April and May. Did you continue to buy even with worsening operating revenue? Do you believe in that? And he's also asking if you submitted to the CVM where the company and stakeholders report that. Well, if you allow me, I'll answer that. We've reported on May 9th at 7:36 p.m., so that's available on the CVM website. When we saw your question, we're like, uh-oh, did we do something wrong? So we looked into that. Everything was reported. So about the controlling shareholders buying back shares, Vanderlei did not buy more shares in April or May because we're not allowed. There's a period in which we are not allowed to buy before the new quarter. We have access to privileged information, and he's the statutory officer of the company in addition to controlling shareholder. So that would be insider trading issues in that case. And as of now, we can only do that unless there's no other confidential fact that's taking place that would not allow us to buy back shares. So we're very careful in following those rules, CVM rules. It's been a learning experience. We've been learning day after day after our IPO in July about what we can do or can't do, what we can say or cannot say. So without a doubt, our understanding is that our result for the quarter doesn't effectively reflect the purpose that we have. We have all the analysis of coverage analysis of the main research agencies that cover our shares and the ratings reports and technical teams that issued our rating were very diligent. So we had a number of calls and discussions about company scenario so that they can issue our AA negative, AA minus rating. I didn't read the question, but I'd like to clarify something. We are absolutely sure of the company's value, Rafael. So, Rafael, what I can say is that 90% of my net worth is invested in this company. Everything I have is invested because of my shares. It's invested in this company. And if I could, I would buy more, without a doubt. I believe that we are trading at a ridiculously low price. I don't know if I can say that, but the truth is, if we do simple math and you have access to our balance sheets, when we consider backlog, inventory, cash, and all of that together, we're being traded very much under all of that. I know that the market isn't favorable towards technology companies, but we truly believe in what we do. We've been with this company for 18 years, and my life story led me to establish this company and manage it until today. We're very happy to be in the capitals market of having going through an IPO and here talking to all of you in difficult times. That's true. But I'm absolutely sure that we're on the right path. We're delivering what we planned. All the plans that we made in our IPO or for our IPO is being executed. Nobody imagined that the Selic would be 13, 14%. That's true. That wasn't part of the plan. But I'm sure that Brazil is a strong country and that the markets that we operate in are very high growth markets. So we're absolutely sure about the future of the company. I can guarantee you that. It's something we strongly believe in that. The company's CEO, as the company's CEO, and as the founder that still is here working in the day to day and will make this company very big and very strong. Well, we're running out of time, so I'll just ask two more questions. Floriano Siqueira is one of our shareholders, is asking Vanderlei if there's room in leverage for M&A. Yes, definitely. I can say, Floriano, that we never imagine, and we always mention that we're not going to do a transformational M&A for the company. We don't really believe in that. WDC considers M&As to add on. So companies that could give us some sort of technology or type of service that add on to our offer. So in that sense, yes, there's room for that. We're looking at the radar to have that type of movement during the year. Nice. And to end, Vanderlei, we have a question from another shareholder, Andre Bizetta. He's asking if you can comment on the potential sales of 5G and also if the level that we're seeing telecom in the first quarter, if that is the lowest point on the curve of what happened and any future expectations. Well, I can say that 5G is still on the radar. We have a partnership with Huawei Digital Power because of the infrastructure of 5G. So there are many data centers, lithium batteries, all of the energy, clean energy side that will be used in implementing 5G. and even 4G towers in farming areas, in rural areas that are a huge opportunity as well. We don't directly take part in 5G. We take part in the infrastructure of 5G. And we have a vision that could bring on a significant source of revenue for WDC after a while. The other part of being the floor of telecom, I wish I had a crystal ball to tell you, but I'm sure that based on what we're seeing and all the difficulties that we've faced of not having product for the FTTH equipment and not being able to sell modems because we didn't have the other product and the manufacturer perspective that changed and that in the upcoming quarters that should get back to normal. I believe that we will only grow from now on. Like Carrara mentioned, we're not going to go back to the levels that we had right after the beginning of the pandemic where we were breaking record after record of number of subscribers because the market's more mature now. It's consolidating and there's strong competition. But I'm sure that it will get better in the upcoming quarters than the first quarter was. Very well. I'm sorry we've run over time. It's already 17 minutes over. All the questions that we weren't able to answer during the call, we have them here. We'll contact each one of the shareholders and investors that have submitted their questions. It'll be a pleasure to receive any requests to schedule meetings or talk about the company's operating model. And as Vanderlei mentioned, we will continue to focus on delivering the results that we're always committed to. I'd like to take this last minute to thank you all for being here with us, for trusting us. I know that in difficult times, everybody is a bit weary, but I'm absolutely sure that our business model and our strategy has a reason why, and its attractiveness. And another thing is sometimes we cannot say everything that we'd like to say. There's governance, there's rules, and we try to communicate to you and to the market according to those rules. Sometimes people get frustrated about not answering things, but we're always open to talk to everyone at any time. We've already interacted with some of you, and others we already do that on a regular basis. So that's part of our values to be as transparent as possible and to show you as much value as we can for all our shareholders. Thank you very much, everyone. Good afternoon.